The stochastic RSI combines the relative strength index, that is RSI, and the stochastic oscillator. RSI is a momentum oscillator that measures the speed and change of price movements. Stochastic oscillator, on the other hand, compares the closing price of a security to its price range over a given period, indicating the strength or weakness of the current price relative to its historical price range. Stochastic RSI combines the strength of these two indicators by applying the stochastic oscillator formula to the RSI values. The stochastic RSI provides traders with a more refined and responsive tool to identify overbought and oversold regions within the RSI. The result is a new oscillator that ranges between 0 and 100, just like the RSI. The interpretation of the stochastic RSI is similar to that of the RSI and the stochastic oscillator. Values below 20 generally indicate oversold conditions, suggesting that the price may be due for an upward correction or a potential reversal. Conversely, values above 80 typically indicate overbought conditions, suggesting that the price may be due for a downward correction or a potential reversal. Traders often look for bullish or bearish divergence between the stochastic RSI and the price action. For example, if the price is making lower lows while the stochastic RSI is making higher lows, it could signal a potential bullish reversal. Conversely, if the price is making higher highs while the stochastic RSI is making lower highs, it could indicate a potential bearish reversal. Now that we have discussed the basics, let's move on to the next key aspect. In order to explore practical applications, we will now visit charting.com and search for screeners. Search for 3MRT scanners. There are two options. One is for long calls and another one is for short calls. To start with, we will open the long call options first and later we will check short call sites too. This list will be updated at end of the day daily. You have a list of old results for backtesting which you can use it for checking the reliability of the strategy. Here, I have used filters to check Nifty stocks which are in oversold condition in 1 hour, 30 minutes and 15 minutes time frame simultaneously. This multi-time frame filter helps you identify stocks that may be experiencing short-term price weakness and could potentially present trading opportunities. Essentially, our objective is to identify stocks that are in oversold region across various intraday timeframes. Following this, we will proceed to analyze charts and identify support and resistance regions, aiming to capitalize on potential reversals. Now, let's move on to backtesting a few stocks, examining both long and short calls. As of today, which is Saturday, May 27, 2023, the market is closed. However, for our backtesting purpose, we will be referring to Wednesdays. Since we don't have any results for Thursday, we will review the historical data from Wednesday. We will be selecting stocks from different sectors and analyzing their performance using charts. First, let's look at SBIN chart. Go to TradingView or whichever the platform you are using. Go to Indicators and select Stochastic RSI, leaving the default settings intact. Adjust the time frame to 15 minutes to identify short-term support and resistance level. Next, refer to the closing price of the 24th as a reference point. Plot support and resistance levels by selecting nearby swing points on the chart. Now, change the time frame to 1 minute for our entry, stop loss and exit points. Now go to 25th, wait for the price to retrace towards our support zone. Once the previous swing is broken or a new swing is formed and subsequently broken, enter the trade using the swing low as the stop loss level. Maintain a minimum risk to reward ratio of 1:2, booking half of the quantity near the target and trailing the remaining quantity. I'll be creating more detailed video covering topics such as risk to reward ratio and money management. Here in this example, we have achieved a risk to reward ratio of 1:3. Let's check another stock. As we move on from the banking sector, let's now focus on JSWSTEEL. We will follow the same steps as before. First, plot the support and resistance level in 15 minutes. Wait for the price to retrace towards our support zone. If the swing is too high like this, it's advisable to either ignore the stock or wait for a new swing to form and break. You can see market created a series of lower highs and swing is broken at this point. It is our entry level. This will be our stop loss and we will target risk to reward ratio of 1:2 as usual. You can see we have comfortably achieved our target, ensuring the stop loss is still intact. Now, let's shift our focus on short side trades, starting with CIPLA, which was the only stock on 24th that met our criteria. Let's backtest it. Following the same procedure, begin by plotting the resistance zone on the chart. In this case, you can observe that although the price was rejected from the resistance zone, the swings are quite large, resulting in a large stop loss. Based on this situation, I advise you to ignore such situations where the swings are too significant, as they can increase the risk associated with the trade. By disregarding these situations, you can focus on trades that offer more favorable risk to reward ratio and better trading opportunities. It is very much important to note that the stochastic RSI, like any technical indicator, is not a foolproof and should not be used as a sole basis for making trading decisions. Technical indicators are the tools that provide insights into market dynamics, but they have their limitations. It is crucial to consider other factors such as market conditions, trend analysis, news, and fundamental analysis before executing any trades. Remember, the market can be unpredictable and no strategy or no indicator guarantees success. Trade responsibly and at your own risk. Before we wrap up, I want to thank you for joining me today as we have explored these trading examples. I hope you have found them valuable and informative. If you want to continue learning and stay connected with future updates, I encourage you to subscribe to our channel. By subscribing, you will receive regular updates, access to more trading insights, and be notified of upcoming videos. Your support and engagement means a lot to us, and we look forward to sharing more valuable content with you in future.